Good afternoon, traders. I hope everyone's having a fantastic weekend. I'm Ross Berland, and um, I'm getting quite a few queries with regards to the mentorship and what sort of outcomes we can expect with regards to the strategy, my personal day trading strategy that I'm teaching to students. And I thought I'd just put this video together. I mean, you're as good as your last trade. The strategy is strong as your last trade. And for those that don't know, I actually showcase the strategy live to the students of the mentorship every Wednesday and Friday currently in the US session. So I only have those trades that I can show you in this video, which have been taken on a demo account, which we use to live trade the live conditions in the market, so it can't be construed as investment advice. But so this is on a demo account, but it's essentially the live market, trading live price action and putting the strategy to work. So I just thought I'd go over the dollar CAD trade, which is the only trade that we took on Wednesday. It's what we concentrated on. In fact, the student, because it was for some of the students, it was their last live trading session. And I asked the students what was on their watch list, and many of them picked out this scenario, this setup, this instrument to trade. So this was actually um, a trade that was picked out by our students that have learnt the strategy, and some of them did well with it. And I'll give a demonstration of the sorts of trades that we're taking. So this strategy, as I said, is my personal day trading strategy. It can also be used for swing trading. The strategy is compiled of various factors in order to break down the market and pick out the um, most opportunist of the instruments for any given day. So what we're trying to do is work from a watch list and drill down to one or two setups on the day that we're going to focus on that are the best trade setups from our watch list. So dollar CAD was on the students' watch list as one of the best go-to trade setups. And as I said, it's my day trading strategy, which I use, but it can also be used for swing traders because these types of setups are construed with higher time frame confluence. So we're looking for momentum all the way up from a monthly chart all the way down to our entry candles, which are 5 and 1 minute candles. But we're looking for a continuity of momentum, which our best trade setups are going to have the most continuity, and those setups often lead to a opportunity to hold on to a position for a number of days because we've got all of the momentum from higher time frame uh, traders supporting the flow of the market, of which if you get in at a peak formation at a swing point, you can ride that over a number of days. So it's not just for day traders, this also can be useful for swing traders. But anyway, further ado, let's get into the actual setup. So we have a number of criteria of which I can't give away all of the rules. If you're not into the mentoring program, if you're not in the mentoring program, that's where you will learn the rules. But I can certainly give an overview of the market and for why we selected this particular instrument for trading. So essentially what we're doing is we're coming into our New York session, and we are looking to trade within a kill zone, right? So if you're coming in at the busier part of the day for currencies, that's 7 a.m. And onwards, I can explain that we trade those hours in and around the equity open. So from 7 a.m., you've got New York traders getting to their desks with their coffees and bacon sandwiches, but they're starting to roll up their sleeves as they get busy as clients start coming on with their orders and so forth, especially around the treasury market opening, and that's when activity really starts to pick up. So that's why we're selecting that time of day. Um, and what we're doing is we're looking for the higher time frame continuity. So if we just break down this market quickly, as you can see here, we have a market that on the monthly chart, it's come back inside of the highs of June, right? So the highs of June were broken in July, but this here is what we call a peak formation high. And that peak formation high was solidified, if you like, when we broke back below June's high. So that is a bearish situation. It's something we call a fake out high on that monthly, on that June high. It's a fake out high. So we're bearish on the monthly, and we're also bearish on the weekly chart because we've broken down in that monthly drop. We've broken down on the weekly chart as well. So while we're below the previous week's lows, essentially that is a bearish market condition. So we can consider on the weekly chart that we're also somewhat bearish, although we're back above the prior week's lows. So we're back above those prior week's lows. So what we're looking for is we're in anticipation that we will break back below those weekly lows. All right, so it was on our list, even though we were inside of the prior day's range. We were, in fact, using the previous day, Wednesday's high, as an anchor point, as a resistance. And so long as we're trading below that anchor point, then we've got continuity in the higher time frames being aligned. So this was a pair that was selected on that basis by the group, our students, on the day. And if we move down to a 15-minute chart, we were starting to get very interested in this, so long as we get below various levels as per the volume profile, which I go into in the mentorship. We use the volume profile. We use levels such as the closing price of the prior day. And there's a number of factors that go into this. It's not a complicated strategy. It's actually very simple once you start understanding the concept of it all. And it's the penny will drop eventually. And like many of our students, they're actually on their way to passing their funded challenges with such companies as like the Fivers and so on. So very satisfied students. In fact, we'll just pause the video to look at some of the recent reviews on Trustpilot. So just popping over for a glance at the Trustpilot, we have Vincent here, who's had a first-class service, he calls it, from first-class gentleman. Thank you for that. So he's satisfied. We have one here, Jamie, on his way to passing his funded challenge. He's hitting 9-to-1 R trade. So put that in perspective. It's not something we get every day, but they are regular, sizable R. So if you're risking, say, 0.5% on a trade, or let's just mathematical simplicity, 1%. If you risk 1%, he's made 9% on that one trade alone. So he's a very satisfied customer as well. And the reviews keep coming in, all very positive 5-star reviews for the mentorship. So hopefully that will give you something to go on. But with this trade here, as you can see, if I come out now of the replay mode, you'll see exactly where the trade was taken. Again, I can't give away all of the rules, but as you can see, that was a very nice trade that eventually paid off. I mean, we came under a little bit of pressure getting in here, but because it immediately put us under heat. But it was a nice 2-for-1 trade setup. Now, I say 2-for-1, it was actually a 4-to-1 by the time we added to the position. So risking a small percentage and then doubling the percentage when we got confirmation that that was well underway. And it was a fantastic outcome to round off a successful week. So I thought I'd just give an insight into what the strategy is, how we day trade it, and this is something which actually would potentially continue into next week. We've got the monthly, weekly, and daily charts all aligned bearish. So until proven otherwise, I mean, this is a market that's in a bearish turn. And for those that want to hold on to that trade, um, then you can do so. And we've got last month's lows as a target in terms of a swing trade. That would be on the daily chart. If you pull this out, you can see this. I'll get rid of all the markings for now. As you can see, here we've had a market that's pulled back and slammed dunked to the downside. So this could be a continuation trade, perhaps a bit of a pullback before the downside continues from a swing trading point of view, well below that 20 EMA on the daily chart there. So very much in a bearish condition, and last month's lows are eyed. So I hope that gives some insight to the types of trades that we're taking and what to expect from the mentorship in terms of results.